I just wanna be free with my people to prosper and hold it down. Don't you sit and wait, contemplating on a revolution. The time is now. I just wanna be free. 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 Can't you see? I just wanna be free.
Okay. Another episode of the Things I Wish I Knew About Money podcast. I'm your host, Camille Smith, and today I thought it would be a great opportunity to share experience that I had last week because I was telling y'all that I had an abnormal caravan and everything, and the way that it ended well, other than a minor mishap. But the event that I went to, EYL and M2M's networking event, was amazing. And I was able to connect with amazing people. We didn't meet in person, but we managed to meet afterwards and realize that there was more people that I wasn't able to connect with. But welcome, Shaq. How are you?
I'm doing phenomenal. Thanks for having me. Appreciate it.
Yes. And I know, like, we didn't get to. I'm pretty sure we like bumped into each other at the event because
Yeah.
it was a
It was
great, inspiring
it
event.
was an intimate room too, so we definitely
Yes.
probably walked by, seen each other. But yes, unfortunately, I didn't get to connect with everybody in the room. I would love
Hmm.
to have. There's people
Yes.
coming in and out, and I know a lot of people were running to the celebrities in town. But it was great. It was great. It was a great experience.
I'm glad. And before we even talk about the experience, because I think I the point of this is just to get an idea of how like everyone felt with and how we can critical feedback and just telling them how it could be better or how it was amazing and nothing changed because I enjoyed the free food and free drinks. But who are you, sir?
Who
Tell
am
me
I?
things.
Love it. I'm Shaq Hall. I'm a mortgage agent, real estate investor, entrepreneur, father, and yeah, a bunch of different hats that I kind of wear. But that's me. That's Shaq Hall.
Okay. And big up yourself for, saying that you're a father. Um, I want to say happy belated Father's Day. I know it's well August and July
Yeah,
passed, but, I like to, especially when someone announces that they're a father, it's a great thing to show that and appreciate the fathers that are active and all that good stuff.
100%.
So,
Very important. I
hmm
believe personally. So yeah.
and I just want to big up the active fathers. And like, first, how was your Caravana weekend overall?
How's my Caravana weekend? So, real good question. It wasn't the traditional Caravana weekend. I wasn't on the road. Didn't play mass.
Hmm.
That's not me. I think at the older I get, the less I care for it.
Oof.
So I'm gonna be honest.
Yes.
I was like only there for the networking event. I
Okay.
had to be in the right rooms and to build connections within people within our city and some people who came from across the border from the states. So
Nice.
I just had a brunch slash dinner, and I think on the Sunday, and then I
Yeah.
was at the EYL build dev co slash M2M
Oh,
M5V
yes.
um, networking event on Monday, and that was powerful as well too. So those are my two major events that I was at to that weekend.
Yeah. Okay.
And then that was it for me for the most part. I was working during Caravana weekend,
Oh,
so
snap.
I
Okay.
avoided the crowd and I avoided the traffic downtown.
Oh yeah. There's the only time I was gonna go downtown was for this event, and I was like, I can handle, I can handle this bacchanal with the traffic because DVP is wild these days. If anyone was stuck on DVP yesterday, I am so sorry. But
Were you stuck as well?
no, absolutely not. I seen that people were playing volleyball, and I was like, "This is crazy! Like, why did this
Hold on,
even happen?"
volleyball on the highway?
Yeah, if
No.
you have to go on the social media to see like what happened and stuff. I
No.
just happened to see it briefly, and
Yeah,
but when
send
you,
me a clip of that.
I
I'm
will.
sometimes I'm out of touch on social media.
Really,
Yeah,
uh,
even though I'm on it and like I'm there for business and promotion and marketing, all that type of stuff, but sometimes I just miss these things, like
true. I'm
when it
sadly,
comes-
I because there's so many IGs that I have.
okay,
I get to see everything, the good stuff, the
nice.
trash stuff, and all that stuff. But it's all good. I didn't get to go to the brunch. So how was the brunch for you?
Again, I was working, so I ended up coming a little bit late. So as
Okay,
I was
fair.
going up, I was seeing
Yeah.
EYL and some of the M5V guys
Hmm.
and M2M just kind of they're exiting it as I was coming out. But
Gosh.
I was able to chop it up and network with some of them,
Okay.
and go to a couple of local restaurants and connect with other
Mm,
individuals as well, to other professionals. So I
nice.
made the best out of it. I was gonna go to the dinner, but you
Hmm.
know everybody was kind of leaving, so I'm like, all right, let me just hang downtown and just kind of just have some intimate conversation with some people I respect across the industry.
Okay. And well, obviously, the industry that you're in mostly is the real estate industry, right?
That's the name of the game.
And I see that most of the folks that were at the event were in real estate. And I think a person like myself, because I'm more into like the personal finance aspect, I get a little intimidated when I see all the real estate folks. I'm like, dang, like I got to make sure I'm in tip top shape and everything, right? But
Yeah.
like after a while, I was able to open up. I saw familiar faces, and I was like, okay, you know what? I can relax and enjoy the vibes.
Hmm.
And of course, I was one of those folks that once the celebrities came, I was like, hold on, I want to get a photo too. What was your experience when they were able to, or before they even came? Because I feel like they came like halfway in. So how was your experience before they even came?
So you talked about food. I didn't even get the food. Like I came in, I think just in time. I ended up having one of my boys. His birthday was on that same day, so we ended
Nice.
up having lunch that day or brunch.
Hmm.
And then when I came,
Hmm.
maybe half an hour, they came in.
Okay.
So I felt like I came good timing. So my
Mm.
experience beforehand was just kind of just navigating the lines, to be honest with you, getting in.
True.
Because shout out to the city, like they showed love again,
Hmm.
for coming out supporting this event, this great event. And we see the eagerness for financial literacy, which is good. But anyways, navigating through the line and
Yeah.
getting into the event, and at the time I just got a beverage and just kind of just was cooling out and talking to some friends.
Hmm.
And they came in, and it was good.
Nice. I didn't get any food either.
Oh.
As soon as I saw it, I blinked, gone, and I was
Yeah,
like,
I was good. I wasn't hungry anyway, so but
"Lucky
it's
you."
nice when they got a nice sponsored event where there's food and drinks included. It definitely does bring out the people. So
It does, and
yeah, but I missed
I
all
don't,
of that.
I don't think I'm actually used to that. Like, I thought like, actually no, like the networks that I've been to, the food was provided and everything because I was like also sponsoring it as well. But the drinks, I was surprised because I was ready to take out my purse, and then looking, I'm like, no one's taking out a wallet. Okay, this is proper. I'm like, wow. I'm like, okay. And I different industries or folks. By the end of the day, I was able to connect with other like-minded folks or different industries. So I really appreciated that. And I got home late. So
Nice.
that's one thing. And with you being in the real estate industry, how did you actually get inspired to do that actually?
to get involved in real estate?
Mm-hmm.
Yeah. So for me to get involved in real estate, it was very simple. I was looking for a way to make money.
Okay.
I was looking for something that had security,
Mm-hmm.
and ultimately, I was looking a way to become a millionaire. And I read books.
Yes.
The one book that kind of changed my life and a lot of other real estate investors' life, and a lot of
Mm-hmm.
people in personal financing. They'll always recommend this book because it is very powerful.
Mm-hmm.
Is Rich Dad Poor Dad by Robert Kiyosaki.
Okay. Yes.
And
Yes.
while I was
Yes.
in school, I was working. I had a co-op position, so I was co-op, and I was working in school, semester type of thing that I had with my program. I was fortunate, so I was actually making money while I was in school. So I was able to save, create good habits, learn the values of credits, which is good. And I was
Mm-hmm.
able to buy my first property in university, and that kind of changed everything for me. I seen the value of having a mortgage, having responsibilities, paying property tax, executing a transaction, having somebody pay down my mortgage as well too, living for free, rent, house hacking. I didn't know I was doing it, but I was house hacking.
Yeah.
Equity, build up in a property, learn how to refinance, move that capital, reinvest in other areas, and that changed the game. So it took one. So to answer your question, it all s-
Ah.
it all got down to reading and understanding and finding out what did I wanted to do with my life or what I wanted to create. And
Mm-hmm.
when it comes to creating wealth, real estate is one of those major pillars that you're going to see. 90% of all millionaires is the quote that I love and I always repeat it. Um, Come through real estate, right? Are created through real estate. So I seen that, and that's how I got involved into it. And thankfully enough, I was in an environment where real estate was cheap.
Mm-hmm.
Um, First property I bought it for the low hundred thousands back in 2016. Yeah, clearly
Folks,
outside of
folks.
where we're from, clearly outside of Toronto.
Yeah.
So yeah, and yeah, that changed everything for me. So real estate is something where you buy it and wait, and you're gonna see the value, right? But if you don't buy it, it's just gonna keep going up and up and up. And
That's true.
I'm a mortgage broker as well too. I can tell you guys, it's becoming harder and harder to qualify, and you got to get more creative. So hopefully we can have a little conversation and to help people who
Abs.
are listening, your audience, to understand
Mm-hmm.
the values of how you can qualify different styles of investing, and you know hopefully we can get other people like yourself involved into
Mm-hmm.
more real estate so you don't feel intimidated, because it's not intimidating as many people think it is. Personal finance and real estate actually go hand in hand.
Yeah.
So yeah, that's that. Hopefully, I answered your question on that point. But yeah, literally, was reading books, understanding what I wanted to do, wanted to create wealth, wanted to be a
Mm-hmm.
millionaire, um, and real estate was an avenue or channel I decided to branch off on.
So you got something in 2016. That was probably the best time to get it. Um,
I really don't believe there's no best time. It's just getting in. That's it.
True.
You can't time the market at all. Like
Oh,
right now,
absolutely not.
people may think it's the worst time, but for somebody, it may be the best time because we don't know. This dip that we're facing right now, this economic downturn that we're seeing, it may be the
Mm-hmm.
greatest time or maybe the biggest wealth transfer that nobody's looking at right now, right? So there's no perfect time. It's just finding ways and being creative to get in. Yeah.
That's actually a great way because true, you don't want to time the market because there's possibility you're when you time the market, you become afraid and you just like you said, just jump in and do it. So I commend you on that, and especially when you said it was like low 100K. I don't know. We don't see those prices anymore unless you're like outside of the GTA and all that great stuff. And I like what you said before is that you want to show folks because you're a mortgage broker, it is trickier for folks to get qualified. And what are the things that you've been noticing about that? Like folks getting qualified?
Trickier. It comes down to three things. I posted this for those who don't follow me. Follow me on Instagram. Short little plug.
Mhm.
Posted this recently. Talking about it's kind of three components to it. It's credit, capital, and collateral.
The three
Right. So it's your
C's.
credit, which is very important in order to qualify, especially if you want to get qualified for the cheapest form of capital, which is lending and through the banks.
Hmm.
You should have some type of solid credit. I would say it would be 680 or higher.
Mhm.
And have it to the 700s, it will be great because that's what lenders are gonna, kind of negotiate and gonna want to lend you money at the
Yes.
banks because you're showing that you have good character, you're someone who pays their bills on time, and you show you're a responsible citizen in
Mhm.
society. You know, so credit is very important. Collateral is what you're putting down. So, what money are you putting down as collateral as a down payment? What assets do you have that you can use as a collateral? Whether it be registered funds, which you probably have some experience in, registered funds, tax-free savings account, RSPs,
Mhm.
maybe mutual funds. I don't know, like something where you have or you can use to put as a down payment to purchase a property. And then the last one is capital. We're in a interesting time right now where people are struggling, people are losing their jobs. But what are you bringing in from your T4s or from a business standpoint? They're going to look at that as well too. So those are the qualification kind of criterias that myself and other financial professionals look at. And
Mhm.
financial advisors at the banks, they look at the entire assets, liabilities, your credit,
Yes.
your collateral, and your capital of what you're bringing in. But it's challenging because the average house in Toronto is like on the low millions, right? So you need at least minimum 130,000 to $120,000. Sometimes even a higher range of 150,000 household income. So that's not just
Mhm.
one person. You know, Usually it's one to two people.
Yes.
So it becomes a little bit challenging. I'm seeing family members get on mortgages now, and more people working together, which I love to see, and
Yes.
buying houses as well too. So just getting creative and figuring out different ways and doing whatever it takes to get own something here in the city.
And I think it is. I love that there's more folks becoming more creative and joining together. I know a couple people that want to like at least have like a group of five to be able to get something. And I think there was an article recently, I think it was in the States, but it was like five individuals save money together so they were able to get property. And hey, it's all about being creative
I
and
think I've
being
seen
able
that too. It's 3 years. They're
to,
saving, I think, $100 per person or something like that.
yeah.
But I want people to understand the importance of the time. It takes
Hmm.
time, it takes
Yes.
commitment, it takes dedication, and
Hmm.
everybody has to share the same goals in mind. And when you can work together, that's there's so much power in unity and having clear vision,
Yes.
and doing something like that to own, right? Whether it be to buy a business or a franchise or real estate itself, it's great. The power of ownership. I'm always going to preach that, just because of what I've seen it's done for my life, what I've seen for my clients, what I've seen for people who are actually at the table making decisions in politics.
Hmm.
Ownership is key to have a voice in this country.
Absolutely. If you don't own things, it's very tricky for you to be able to not control, but have a say in certain things. So, yeah, okay. So I like the three C's. So credit, collateral, and capital. Where did you find that concept? Like, did your mentor or something teach you, or is just through of learning and all that great stuff?
Just through experience, to be honest. I just kind of narrow it down to make it simplified.
Okay. Mm-hmm.
But there's other components to it. There's other components to it that they look on your credit report, but
Yes.
those three C's are actually part of
Mm-hmm.
um, the five C's of credit, right? So
Yes.
the components of that as well too. So yeah, it's just the basics of what lenders look at and what me every day I look at through clients, helping them to
Mm-hmm.
get their mortgages and purchasing real estate and business products as well too.
Okay. So see, I know there's a lot of folks that appreciate you and all that great stuff.
Yeah,
And you said that you're a community leader.
yeah.
And how did you step into that?
Um, so for me,
Mm-hmm.
it's following a lot of people who I look up to, my mentors, and people who give back.
Mm-hmm.
I feel like anytime you climb or you reach to certain levels, I do believe in going through a door, knocking off the hinges, and letting other people come up with you.
Yes.
So as I started to climb in my profession, in my industry, is just giving back and providing different things to the community, whether it giving my time volunteering, whether it be putting together, charity events, donating to kids that needs. We do an annual toy drive during Christmas time. Donate a couple $1,000s, raising toys.
Mm-hmm.
It's just really just finding ways to provide economic value, and making sure that everybody can climb together. You know what I mean? So
True.
I'm a very avid believer in giving back, doing things with community. Being involved with churches who do different things for the community as well too, and just being a pillar, and a light in someone's life, because you never know what a meal could do, or just even a toy, having
Mm-hmm.
toys during Christmas time. You know what I mean? Can do
Yeah.
for somebody, or even like in my brokerage, my office, we donated a couple $1,000s to some students, to for their tuition as well to a scholarship.
Nice.
um, Partnering up with More Freedom and Make Your Mark.
Mm-hmm.
We donated a couple. I think it was about $5,000 to some children, a couple 5 individual children who applied for some scholarships. So that's the stuff that I'm passionate about, and I want to do more of it as time continues to go. Is
Mm-hmm.
to continue giving back and figuring out ways we can strive together as a community.
That's really amazing, especially like giving for the students. The tuition is
Yeah,
no jokes these days, and at least during Christmas time, like, giving that joy to a family or a child that that probably didn't have hope with Christmas, but they were able to see that. So that's really dope that you're giving back to the community. I think it's very important to do that, because without the community, how else can we be here, right?
but, yeah. They
Right?
say it takes a village, right? So,
It takes a village indeed.
and then what I like to say to people as well too, if you even look at the word community, that word at the end, those 5 letters, then unity is what's really gonna help us everybody grow, right?
Hmm.
So I'm a firm believer in that.
Nice, nice. I like that. You said that twice, and I'm like, okay, unity is very key, and especially the industry that you're in. Um, do you have like a team that is pretty solid that you'd be able to, whether it's your mentors or mentees, that are able to give you that guidance that you need to keep pushing through all those times when things are tricky, I'll say.
Yeah, I live through other people. So
Hmm.
whether it be my clients or people who have helped, sometimes they give messages or testimonials, and it keeps me going, through the dark days, through the bad days, because we all got challenges in life, we all got problems, and
Yeah.
it's either problems or solutions, right? So I choose to focus on the solutions. Like
Mhm.
literally, what I do for a living is literally helping people through their problems. So it becomes it's burden sometimes. It's a burden, but I love doing it at the same time.
Yeah.
But it's remembering the purpose behind it. It's remembering the impact, what's being done in people's lives, right? And the success stories. I live for the success stories, right? So, yeah, 100%. That's what keeps me going more than anything. It's the
Mhm.
impact. It's what's being created. It's seeing people, um, you know, get out of debt. Improve their financial situation, improve their credit.
Mhm.
Own not only one property but maybe two, three, four. Maybe
Yeah.
buy a house back in Jamaica or down south in
Oh.
Florida or overseas. It's just showing the people different strategies, what they can do, and one of the powerful ways to do it is through real estate. Open up a business, see
Mhm.
people become business owners now, leveraging their property as collateral. You know what I mean? So that's what I live through, to be honest with you. So it's not so much mentorship; it's literally people who I've helped.
Okay.
Um, those are the people that kind of push me, and it's a smile on some children's faces as well too. The next generation coming up. I do believe it's our obligation, our duty, um,
Mhm.
to create these different paths for others, so others can walk through easier, right? So, yeah,
Indeed, and that's like the one key about generational wealth. And I do remember you said something about I thought about this is the variable weights have been wild.
yeah, good thing. Yeah.
How has that been for your clients? Have you been able to tell them like, "Hey, this is the goal. Just stick to the goal, and this is you'll be able to overcome it."
Yeah. So I always told people in general, it's kind of been my theme for the last like year and a half,
Mhm.
is when in doubt, zoom out. So if you look at the charts, I
Okay.
used to I come from a trading background. I used to trade. Well, I still do
Nice.
kind of do, but
Mhm.
I have a background in finance and looking at charts and economics and interest rates, bond rates, yield rates, returns, gold, oil, currencies, and
Mhm.
seeing how um, the value of understanding how charts operate,
Mhm.
and learning supply and demand and economics. But anyways, in terms of answering your question when it comes to clients and interest rates,
Yeah.
back in the 80s, interest rates were, and I have a video on that, another plug back to my Instagram, a video on that Instagram, where I was showing like interest rates were like 18% at one point in the 80s, right?
Yep.
Far before where I was born, but in the 80s, um, interest rates were really high. So it's like we've been blessed for a long period of time, but just
Mhm.
understand that things go up, and what goes up must come down. What goes down must come up. So it's
Exactly.
a cycle. So just understand where we are in the cycle, and just
Mhm.
being patient and just showing them the long term trends of how real estate performs regardless. They always say 5 to 10 years you're going to double your capital. If you buy a house for 500 and in 5 to 10 years your house should
Mhm.
be worth 850 to $1 million. You know what I mean? So you're going to see that growth long term. So it doesn't matter too much about the interest rates,
Yeah.
because they're always going to fluctuate. So yeah, and there's only so much we can control. Like the government kind of manipulates and determines the interest rates based on economic conditions that are happening right now, whether it be inflation, whether it be unemployment rates,
Mhm. Mhm.
population control, net
Yeah.
migration, right? So
Yeah.
there's only so much you can do. But what I'm seeing, to go back to your question as well, too, are people unfortunately that were locked in 5 years ago are
Mhm.
paying 2%, 3%, and now they have to come and pay like 7%, right? So double what they're paying before, so they're getting that shock. But
Mhm.
now showing them different ways to create income in their property, whether it
Yes.
be adding a basement suite and adding rental income to their house, whether it be doing some renovations on their
Balance
property
out.
to increase that value for its appreciation, right? So it's
Mhm.
just different strategies that it's great to talk to a professional to understand that, but educating them. Like I enjoy, just like what you're doing right now with this podcast.
Mhm.
Things that I wish I knew about money, right? You're educating people about different perspectives on the things that they wish they knew about money growing up, right? So same thing with rates. It's educating people and showing them the chart, showing them the data, showing them when in doubt, just zoom out and you're going to see that yes, it's going up. We've been blessed for a long time, but eventually it's going to come down. So if you can afford it, if you can, you know, um,
Push through.
push through, through that storm and battle the storm and pay your mortgage down and find different ways to create income, adding different people onto your mortgage or your house,
Mhm.
you'll benefit in the long term, 9 times out of 10. So yeah, just letting them know that.
Yeah. Can you imagine? I feel it for the folks that like it was at 2%, and all of a sudden they're like
Yeah.
7.
Yeah. Yeah.
So would you advise, or I guess it depends on everyone's situation,
Everybody's different. Yeah.
fixed or variable?
Yeah. So for me, I'm an investor. I like variable.
Mm,
Variable over time has always been lower. So even though
okay.
right now variable is a lot higher than fixed, it all depends on the person's situation. But if they can manage variables, it's always been cheaper for the most part long term.
Mm,
But if you don't like the fluctuation, you
getting
get
anxiety.
anxiety with the news, because that's all it is. A lot of things that are happening, people coming to here with fear and crying. Like I have tissue box on my in the middle of the boardroom that we have here. And the only
Mhm.
reason why I'm in the office today is because I had a client that was dealing with some issues as well too, with interest rates and stuck in a private mortgage and their house valuation dropping, and tough
I.
situations where I'm seeing some homeowners potentially may have to sell their house and maybe rent for a couple of years before they get back into ownership and having to pivot. But
Mhm.
understanding different strategies to make sure that at the end of the day, you're in
Yeah.
ownership, you're getting back to ownership, or you're looking
Mhm.
to increase more ownership. That's the bottom line. So it's navigating the fear, because fear is
Yes.
not, it's not real. I use an acronym, or I've heard an acronym that other people use too. Fear stands for false evidence is seeming real, right? It's not
Mm-hmm.
real. So it's just understanding what interest rates are, what determines interest rate and fluctuation. If you cannot manage the ups and downs and the roller coaster, if you don't like the excitement, when it comes down to it, it's staying fixed,
Mm-hmm.
right? It's staying fixed. I wouldn't fix for too long because I do believe it's going to start coming down. So, I'm showing people, strategies of doing short term fixes.
Yes.
But if you're somebody who just wants your set payments for a certain amount of time, lock it in for whatever you feel you can manage and that you're comfortable with. Yeah. So
Yes.
it's tough to answer that question because everybody's different. But
Yeah.
I'm always going
True.
to go back down to the educational component, and everybody has different aspects or visions for what they want for their financial goals and investment portfolios, right? So
Yeah.
it depends on the client and the property.
And I like that answer because, like I said before, it all depends on the individual, and if you can't handle the heat, stay out the kitchen. But I love how you're able to educate folks on, like, hey, even if you have to steer away for a minute, we can always go back, because
And
sometimes
it's
you have to
okay.
go. Sometimes you have to step back a little bit further so you can just
Yeah.
elevate to the next level, right?
Minor setback for a major comeback, right? And it's okay
Mm.
stepping down, but I'm telling you, there's some. I deal with older clients a lot, so there's some
Yeah.
older clients that are stubborn and they don't want to hear it. And I'm not going to be the one who in a couple of years say I told you so. But at
Ooh.
the same time, it's understanding in
Yes.
life in general, we're
Mhm.
going to meet roadblocks. We're going to meet things that we didn't anticipate, you
Yes.
know. But what we can do is we can navigate, we can pivot, and then we
Mhm.
can get you a strategy where you can always get back in and maybe attack even more and be in a better position. So sometimes it is good to take a step back,
Yeah.
and take a step down to elevate
Mhm.
even higher, right? If the goal is elevating higher, it's doing whatever
Yes.
it takes no matter what, right?
True.
And some people, they have value now. Let's just say the market continues to drop and values drop even more. You probably
Mhm.
would have been better selling your house in the summertime when it was hot, rather than trying to
Ah.
wait and force selling later on, right? So
True.
yeah.
Dang. Yeah. Them. I'll say it respectfully. Speaking to the older generation is sometimes interesting, to say the least.
Yeah.
I'm glad you're able to handle them and all that great stuff. And what else with the qualifying and the variables? Hmm. There's another thing that you wanted to touch. I'm trying
We
to
can touch
remember.
whatever you want. This is more of a conversation, so whatever you want to ask or you want to communicate about, you can go back and
Hmm.
forward
Mm.
about. I'm all for it.
So what you got me with is talking about the podcast and like things I wish I knew. So even though you said you're young, what did you wish you knew when you were much younger? What were like the three things you wish you knew about money when you were much younger? Even though you started young working in high school, which I commend you
No,
because not a lot.
college,
College?
university,
Sorry.
university.
In
Yeah,
university, that's a great way to help,
yeah.
like, boost and everything. But when you were younger than that, what did you wish you knew about money?
The value of a dollar. The dollar today
Mm,
is not worth a dollar tomorrow, right? I think when I was in high school, or when I was younger, any
mm-hmm,
lunch money, any allowance that I got, any hustling that I did, and I got a little bit of money, it just was gone. So the value of the dollar and the value of having a piggy bank, the value of having a bank account when you can open it as early as you can open a bank account. If your parents set you up with a bank account, the value of having a credit card, sorry, not
mm,
credit card, a debit card. You
debit
can't
card,
have a
yeah.
card at 18, right? But a debit card, and having a savings account or having
Mm-hmm,
some type of strategy with your checking account where it would round up, to the nearest dollar and go into your savings account automatically and not touching it.
mm-hmm.
I think that is what I wish I knew.
Okay.
Think about all the times that I've helped, McDonald's get richer, and some of these pizza spots, and these
With their
convenience
dollar deal.
stores, yeah, and these ice cream trucks and these patty stores, you know.
Mm.
What could I have done with all that money? That and don't get me wrong, you got to eat, but more times, you know, when you're younger, you have somebody else taking care of you, right? So you know, most of that's covered for you, you know. So
True.
the value of the dollar and saving,
Yes.
and strategies. I was pretty good, don't get me wrong, but you know, learning that earlier would
Mm-hmm.
would definitely have elevated not only myself, but you know, the people around me a little bit
Okay.
higher. So I think that's one thing I wish I knew about money: the value of money, what it
Mm-hmm.
meant to save, and what it meant to understand wants versus what's needed. You know,
Mm-hmm. True. True. That instant gratification.
yeah.
Folks are, I think that's when it comes to needs and wants, is the instant gratification folks are trying to understand with that, right?
Hmm.
And I almost forgot with, because obviously we're talking about real estate one on one, is so you got your first property 2016. When did you, how did you leverage that to be able to invest into more properties?
Very good question. And again, with real estate, there's something called equity. It's very
Mm-hmm.
important that people need to understand. So as you have a traditional mortgage, you know, you're
Yes.
paying, of course, the interest, which you don't get back. That's the lenders making their money. But when
Yes.
you have your principal and you're paying that down, you're building something called equity, right? So you're paying on the mortgage and the value of the house increases well too. That gap you can actually take out. You can
Mm-hmm.
actually leverage it and use it, right? And this is to this day, still people don't understand this concept. You'll be surprised that people just want to be debt free and have their house paid off, but that's money just sitting there. That's debt. You know, you can use
Mm.
that money and fund different things. So I understood equity, understood going to the bank. You know, I got recruited out of university my last year to or second last year to working in the bank. So I understood, you know, a lot of people who were moving money who had the higher bank accounts and what they had, and they had assets, right? So, understanding equity that the bank's going to give me a certain portion, not the 100% of that equity, but maybe 80% of that value, taking
Yes.
that money out and putting it into other properties. So, that's how it is, and that's how everybody kind of scales when it comes to real estate. It's getting one, building up some equity, doing a refinance, and taking the equity out, and then buying other, whether it be pre-construction
Mm-hmm.
or whether it be investing into private lending, maybe a development project, or just buying
Yes.
another income producing property. So yeah.
Okay. And I guess in the last 2, 3 years, have you seen it? What's the percentage of folks doing that, like using leveraging like that to get the a rental property? Because boy,
What's the percentage?
yeah.
Good question. It's not a lot.
Mm-hmm.
It's the ones who understand the game of how money works or how real
True.
estate works.
Mm-hmm.
So I would say, I don't know, maybe 30 to 40% that do
Okay.
it to scale. So it's not 50%. It's
Yeah.
definitely a little bit less than that of people who do it.
Mm-hmm.
Because some people still have the older mentality that debt is bad. I don't
Yes.
want debt. I'm doing whatever it takes to pay off my mortgage and be debt free, right? Which
Mm,
is, it's something great to strive for, but debt
that
leverage properly can make you millions. Debt leverage properly can bring you cash flow. Debt
yeah,
leverage property can save your entire, can change your generations. You know what I mean?
I
If
like
you
that.
understand what to leverage properly, right? So, I'm glad that you have podcasts like this. I'm glad that, they have events like EYL. People are seeing the hunger for
Mm-hmm.
financial literacy and understanding, how finance works, how money works, how the power of leveraging works, and understanding debt. It's not a bad thing. A lot of things
It's
that
not.
we grew up, scared about, or people poured into fear into us about
Mm-hmm.
are some of the things that is blocking us from, changing our lineage, to be honest with you. So just education. It always comes back to educating yourself and,
It
not
always
being
does.
ignorant to change and different concepts
Yeah,
of building wealth.
nice. Well, I like that saying debt leverage because I think that's the first time I've heard it like that. But it's able to like say like, hey, debt isn't scary. Don't worry, we can use it responsibly to get things that we need, like whether it's property, businesses, or like other income producing assets. So I'm glad that you mentioned it like that. And I don't want to steer you away from the other two things that you wish
Hmm.
you knew, because you said the value of the dollar, which is
Hmm.
obviously valuable. What's the second thing?
The value of the dollar.
Hmm.
Second thing I wish I knew about money was, I'm gonna be very like,
Not hey, the floor is yours.
be very controversial here, but money isn't real.
Woo!
It's it's not real. It's like it's just this digits on the screen. It's, you know, it's something. Money is just, or making money is exchange of a value, is exchange of an item. You know, whatever value you're providing. You know, there's an exchange method that happens that you can generate it. So
Yes.
um, if you're providing value, you're gonna find the money. So I probably, that would lead me into my third thing, because I know you could ask the third thing is, don't chase money, attract money. So that's one thing I wish I knew, because I spent years maybe trying to find ways to chase money, and not
Mm,
just for myself. People listen to this as well. They probably wake up every Monday morning, buy their coffee, and buy a lottery ticket, right, hoping that they're gonna win. Even though the odds are like, you can get struck by lightning a couple of times before winning the lottery, right? But people go about their lives trying to chase money, and oftentimes what I do find, when you try to chase money,
mm-hmm.
it goes away from you. So it's finding ways you can be more valuable and attracting money into your life. So I wish I knew that at a younger age.
Yes.
um, I
I,
think that would have helped me save some time.
I think a
But
lot of people
I'm
need
still
to know that.
fortunate to even learn it though as time goes on, because I still see grown people that don't understand that as well too. Right? They do anything for a dollar, and it's like, you got to have morals, you got to have principles. You
Hmm.
know, so it reminds me of a quote from Bob Marley. I think he said, don't try to gain the world.
Hmm.
Um, I'm misquoting it right now. I can't remember exactly,
Don't
but
worry.
don't try to gain the world for just silver and gold, right? So it's like,
Yeah.
that was in ancient Egyptian times, when Jesus was on earth, that was the dollar, that was the money, it
Yeah.
was gold and silver and these coins. And at one point, we were part of the barter system, slaves and livestock and commodities, were part of the
Yes.
barter system as well. So goes back to my second point where,
Hmm.
it's money's not really real. It's just
Yes.
exchange of value. So yeah.
I like that. And especially, I think you're right. You're more likely to get struck by lightning than win the lottery.
Mhm.
I'm pretty sure it's like a 1-2% that actually win. That's why I always show folks, like, instead of putting money into the lottery, why not
Mhm.
invest in like an ETF or something every week, every month and stuff, and you'll see more value in that. But it's just like that possibility, that risk that you people want to take, like, yo, just maybe, just
Yeah.
maybe we're gonna get that what is it? There's a winning ticket that was undeclared, but was finally undeclared as of
Yeah.
late. But whoever
Was
has that
was there?
lottery ticket
Was
just
there? See, I didn't even pay attention to that type of stuff. Like,
it's just my phone. My phone just
yeah,
tells me these things, and I'm
yeah.
like, oh, I was like, okay. I just wish they were in Scarborough or something. And also, what are like other amazing things that you're doing in the community or just in general? Like, with just I like to let folks know what everyone's doing and giving you the
Mhm.
floor and all that good stuff.
For sure, for sure. Some of the stuff I'm doing
Hmm.
in the community, we do an annual toy drive, which I mentioned before.
Hmm.
Um, Partnered up with some non-for-profit organizations, active
Nice.
involved in church communities as well too.
Hmm.
So I just do my fair share. Nothing really out there that I feel like to market, because
Fair.
it's something that I don't do it for the marketing. I don't do it for the recognition. Is just doing it out of passion and purpose.
Yeah.
So nothing I really feel like to market out there. But yeah,
Hmm.
I help out when I can when it comes to
Yes.
community efforts. So anybody listen to this that wants additional volunteer or want me to speak, like I've speaking at schools as well too,
Nice.
to some Black student groups or to younger kids based on talking about financial literacy because now it's part of the curriculum. It took them a while, it took them years to add something to the curriculum, but now they
Right.
talk a little bit about financial literacy. So I know it's going to be watered down a bit, uh,
Yeah.
but at least there's a step in the right direction when it comes to the curriculum that hasn't been changed for years, right? So,
Yeah.
um,
I
yeah,
know. It is it I think they decided like last year or so. So it is a stepping stone. Like it's taking it took them longer than it should have, but at least we're heading in the right step to give those kids what they need cuz like kids catch on to it quick. And the one thing I notice is if you teach the kids, the parents will be um like aware and be like, Olan, what did you just learn in school?
yeah,
Come, teach me this as well. And that's the one thing that I love about teaching the kids as well. Um, I would love, I know you don't want to market it really, but I would love for folks to find a way to contribute to the toy drive that you have. So please send me the link and I'll
yeah,
make sure I put it in the show notes and all that great stuff. And
yeah.
how can the folks find you?
Easiest way to contact me is on social media, Shaq Hall _. We also have a media page coming up as well too,
Okay.
on YouTube and Instagram and TikTok and all these social media. It's called Love Your Equity, which we strive and talk about ownership. And we're going to be doing community events as well too. So look out for that. The major launch is coming next year, 2024. But we started to produce some content with
Mhm.
some real estate professionals across the industry and some other um, uh, entrepreneurs who provide value within the community. And the whole idea behind that is equity and ownership. Hall Real Estate Inc. That's kind of the investment company. So people who are looking to do private lending or are looking to invest in their portfolio, or homeowners that we start to do short-term rentals as well too. Homeowners who don't want to deal with tenants and want property management. We have a property management company as well.
Okay.
So we do short-term rentals and long-term leases as well, but mainly
Okay.
short-term rentals currently right now, just to help people generate more income
Yes.
in their basement suites or in their entire house or their investment properties that they want to convert that into an Airbnb or VRBO or hotels.com,
Mm,
to get some more income coming in. So that's how the people can find me. These are my socials. I see the message below. So
boom,
you guys
boom,
can
boom.
contact me. Very
Yes.
approachable. So send me a DM or a message. I respond
Yes.
to everything. I see everything. And yeah, I'm just a vessel. I'm just somebody here to help. And I look forward to building wealth with everybody, right? We all can win.
Nice.
I believe in unity and abundance. And there's so much we all can learn from each other. So,
Absolutely. And I love that you said you're a vessel because I think, especially the individuals that are in the finance world, definitely um, it will benefit the community more when we're a vessel. And I love how you're saying unity, abundance, and all that great stuff. So I really appreciate you coming on and blessing the stage and anything. Is there anything you want to tell the folks before we head out? Because me, I have a play to go to. I don't want to be late. I don't want to be that person.
yeah. Don't worry. We'll get you there on time, hopefully. But yeah, the last thing I'll just say is, continue to shout out to you, Camille, and for this podcast. And if you guys got value from this, feel free to share it, like, share, subscribe,
You see
push
it?
the
Boom, boom, boom,
movement.
boom.
Let's get some more viewers. Let's get some more people knowing, and
Exactly.
sharing their perspective and understanding. Things that they wish they knew about money, and let's learning together. Nobody
Hmm.
has it all figured out. If they do and they out come across like that, then
Right?
run. But for the most part, we're not all perfect. We all have different experience. We all can learn together. But the
Mhm.
power is educating and learning from each other's experiences. That's the new knowledge. That's the new money, in my opinion. Right?
Yes.
Money is
Because
the new
money isn't
knowledge.
real.
Because money isn't real. Money. But yeah, that's the last words. It was fun. Thanks for having me, and I look forward to connecting soon,
In
and
person.
maybe in person at a future networking event.
Yes.
So yeah,
And I know many to come. And hopefully you're gonna be going to like at least Jerk Fest or something.
I
Jerk
think
Fest.
that's happening this weekend, right?
Yeah, this week
It's so
is
busy
Jerk
sometimes.
Fest, Taste of the Danforth. There's so much happening in the city.
Yeah, there's a lot. There's a lot.
Right? But I'm very honored for you to bless the stage.
No
Thank
problem.
you so much. We will definitely link up. So folks, you have it. Please reach out. We want to be the vessel to create generational wealth. So make sure you like, subscribe, and comment and all that good stuff. Until next time, folks. Ah.
Financial literacy, knowledge is a must. So link the flip boss, watch the result flash, and watch your life change and feel a better cause. You have a business or a plan and want to make it. Yeah, flip and floss, are the want to manifest it. Yeah, and if you want to better manage all your credit, call the boss, flip and floss, no doubt, then we do it. Yeah, flip and floss, money literacy boss. Yeah, greatness in our blood because we're working for your cause. Flip and floss, money literacy boss. Yeah, boots up your knowledge for your minimal cost. Hey, yeah, flip and floss, money literacy boss. Greatness in our blood because we're working for your cause. Flip and floss, money literacy boss. Yeah, up your knowledge for your minimal cost.